second episode. We started off our maiden episode and spoke a bit about inward expansion and so on. Just to reiterate, purpose of this podcast is to expand and elaborate on what we do as Finovate. What products do we offer? What do we live for? What are we called for? What we really believe can help the world and help SMEs around the globe, not just in South Africa, but wherever. Where this is not just trying to be some promotional content, but we really believe what we do can help. It can meet needs. It can meet pain points, and that's why we're doing this, to explain the heart behind what we do, but also some of the nuts and bolts, the nitty gritty, so that people can also get to understand the words and the terminology they hear floating around, but they don't always know what it means. And today's one won't necessarily be an exception, because when people hear the words fractional finance, it really doesn't mean much from the get-go or for face value. You've heard of outsourcing or outsource CFO, and you've heard of accountants and bookkeeping and fractional finance, and it all just can become confusing to a normal small business owner who just needs to pay the bills and make sure that people get paid and so on. But we really believe this is a super impactful product that really has helped businesses, as we've seen, and can help many. So maybe start off with the heart behind fractional finance. What is it? Define it for us, lay it out, make it simple. Because there's many who would like to understand how this is different from the other things you've heard or the other types of services we get.
Yes. So thanks, Martin. I think in terms of fractional finance, why do we choose those two words? So first, fractional. We believe that for scale-ups and startups, let's use a turnover range between 6 and 200 million turnover in rands. We believe that you don't necessarily need a full-time finance team in order to get the insights and to unlock the value that a finance team can offer. We think a fractional team, having the right amount at the right level of competencies, can also unlock the same amount of value, but at a fraction of the cost. So fraction is fractional. Why we don't necessarily like the word outsourced is in some way, there's a bad connotation that if you outsource, you reduce the competency of that function. And that is not the case. We think it is at least on par with an in-house function, or it could actually be better because the person is really specialized and can tap into a wider network of resources, working with a firm like Finovate or another firm that has all these other resources to your disposal. So that's the word fractional. Finance, why finance and not necessarily CFO or FM or maybe a fractional bookkeeper, is that we believe you need a well-balanced finance leg of your business. So think of the legs of a table. If the finance leg isn't stable, the whole table is going to wobble. And we think that it is the whole finance function that has to function well in order for you to really unlock the value out of that. To give you an example, if you only have a great CFO, even a fractional CFO, if the data that he receives isn't timely and accurate, how would he be able to unlock value for you as a business owner? If you just have good data, but you don't have somebody that can give you the insights at the time that you need it and can't forecast, and if you can't use the data, interpret it, and use it, how are you going to unlock value in your finances of the business? And if you don't have the reporting on top of the basic data, then it becomes really difficult for anyone to interpret that. You probably won't be able to pass a due diligence. You probably won't have great forecast, budgeting. You won't know what your business is worth. So all these different things, for us, it has to be the whole finance team has to function coherently as one team in unity. And that's why we've called it fractional finance. So in a nutshell, we have an offering that looks at your internal needs, looks at your internal team, and we collaborate with that team to build you a finance team that is the right amount of resources at the right level in order for where you are in your life cycle of your business.
So specifically speaking on the life cycle your business is in, at what point do businesses need, I don't just want to say when do they need fractional finance, but
Yes.
when do they need more than just a bookkeeper? Because
Yes.
obviously for smaller businesses, you don't have as much data. There's not as much risk. It's maybe a very simple business like a hair salon or something like that. Maybe one or two people working for you. You just need your compliance met, your VAT handed in, your
Yes.
tax paid, and so on. So at what point do you need to look further than just a bookkeeper or accountant to make sure you're compliant? And we'll get to the 5C
Triggers.
framework, which
Yes.
explains it nicely. But at what point do you tip over into, okay, I actually need a greater and more comprehensive finance function to help me succeed?
So maybe two or three triggers that we've identified, and we've learned from mistakes. So initially we thought that we could implement something like this right across the board for very small and large, but the reality is a small business with turnover less than 1 million. The last thing you want to spend on, and that you should be spending on, is your finances function. You should try and reduce it as much as possible. Keep it to a minimum. It does not make sense. It's just going to eat up so big a portion of your net profit that the value that can be unlocked is just not worth the cost that you'll be paying. If you are between 1 million and 5 million, I don't think the value of that fully fledged finance team is, it could be it's a maybe.
And sorry, just to clarify, we're talking about annual turnover now.
Annual turnover in rands. So between 1 and 5 million, it's probably a maybe. The reason that it could work is if you know that you are in a growth stage and you want to build the right systems and the right team in order for you to scale. But if you're not there and if you don't have funding, it's probably also not going to work. For us, I think anything past 5 million, that's when it starts making sense. You really need to focus on your finance pillar, your finance part of your business. If not, you're going to run into different problems, which we'll explain a little bit later. And there is already enough turnover in order for whoever that team is to really unlock value for you. At the same time, it does not make sense to hire a full-time financial manager or CFO at that stage of your business. It's just going to be too costly for the size of your business. But you would definitely need that type of resources and expertise in order to make sure that you can grow sustainably. Your pricing is right. You understand your cash flow. Your structure is set up well so that when you do sell your business or when you're in the position to look at dividends, that you know you're going to do it in a cost-effective manner or at least a tax-effective manner. So at least 5 million. And then where we've seen it cross over, and you can probably have a fully fledged team, probably at 200 million. That's when it makes sense to probably have that full-time CFO, FM, maybe a team. Ironically, when clients do start with us, they just keep going with us, even above 200 million. We've got a few clients above 1 billion, and they still make use of us. It doesn't mean that they also have an in-house team, but we can collaborate and keep on collaborating with them, working on certain problems where the in-house team might not have the capacity or the skills to in order to solve those problems.
So twofold question is, and we'll go deeper into fractional finance and the 5C and so on, but for businesses smaller than 5 million, and this is sort of an arbitrary amount to some extent. It all depends on your context and the nature of your business and so forth.
Yes, if they've already received funding and it's a scale, it's a startup that needs to scale.
Different story.
It's a different story. Once you've received that funding, you need to allocate the funds. And if you don't have a strong finance function, you literally waste money by not allocating it correctly. And for us, that is stewardship. So being a good custodian, understanding what comes in and how do I manage that? How do I allocate that so that it can actually be useful and can add value to the business? If you don't have somebody that's strong in finances, most probably you'll just waste your investors' money and you won't allocate it and track it properly. So for me, that's already one trigger, and that's independent of what the turnover is. Normally, those businesses don't even have a revenue figure, but that would already trigger that you would need something like a fractional finance solution.
I suppose when it comes to specifically startups and scale-ups,
yes,
it's really time sensitive because you've got funding. You're probably running at a loss because you're pushing growth initiatives, you're pushing marketing. And as much as marketing eats cash, at some point it needs to feed cash.
Yes.
And startups often, well, you'll be able to know better than I, but startups often fall into the trap of pushing on marketing and growth, but then not really having visibility or putting emphasis on whether there's return or whether it's actually good investment. And
Yes.
that's I suppose where the fractional finance comes in as an example.
Yes, no, definitely. So to your point, one of the first questions you'll see, we come in and we don't necessarily want to come in as the expert of a client's business. Like the CEO, the founder, they are the expert of their industry, of their business. But what we can do is we can ask them the right questions. There's a saying like that they actually know the answers. It's just they don't know the questions to ask. And
Very good.
and this is something that we can unlock for them. So we can come in and we can ask the right questions that helps them to solve it. And we've built the frameworks and we've built the models that can get them to the solution. But somebody needs to come in and ask the right questions. And that would be a big part of this fractional finance offering and solution, is really knowing that you've got somebody in your business that is asking the right questions financially. Like, do you have a financial model? Does it actually make sense to invest the money into the different categories that you are? What is your return on the marketing spend that you've got? Do you know what is your cost of acquisition or customer acquisition cost? Do you know what is your customer lifetime value? These type of questions, yes, it's industry specific. So it looks different for maybe a tech startup or a tech company, a fintech company, compared to a services company and maybe a retail company or manufacturing company. But all of those industries have their own set of questions that need to be asked. And we believe that's a role, definitely a big role that can be played even early on. And also why we built this framework, that even if you don't want to go onto a retainer, at least take the health assessment, at least set up a call, know when would be the right time for you to engage with a fractional finance team, and also understand what are the things that you are probably not even thinking of. IP, for instance. People don't necessarily think about IP, where it's based, how they've created that. Structures, they don't think about that. So there is probably value to be added on all levels. It just initially it's very difficult if that is not, if it has to be paid by the founder itself, and they also need to pay their own bills.
So I think it's key that you mentioned this is about asking the right questions.
Yes.
Or about unlocking the value that the owner might have, but they don't necessarily have time for introspection or don't know what to ask. And also we're speaking about startups and scale-ups here because that's sort of, a lot of the people we service with this offering and this product. But it's not as if it's just for them. You can have any nature of business, and I'd like you to get into the 5C framework after this, just explaining it more clearly. But in any nature of a business, whether it's a family plumbing business that's been going over the years and you've steadily been chugging along and hiring new people, you still have cash flow needs and requirements.
Yes.
And issues, and you still need to be compliant, and there's a lot of questions to be asked, whether you're a startup or a super steady business just going along, or one that doesn't grow very quickly, or maybe you're a massive mining company. It all still applies.
Yes.
And for some, you might go deeper into asking questions about cash, and for other, it will be super light. Don't focus on this now, rather do that. But maybe explain a bit about the 5C framework, because this is how we attack this offering. This is how we approach it. This is how we think about the finance side of the business.
Yeah, so history on the 5C framework and why I designed some sort of a framework to use and to approach this problem and to try and solve it through a systemized way. So we probably a few years ago, in my background is that being like a CFO on a business that was and is scaling, and so the first place where I applied the 5C was within our own businesses. And what helped is to structure it in an orderly manner, to look at different components of the finance function and to ask questions within that and to track and measure that and to actually look if you are solving those problems. The first thing it created is just to make sure that holistically you are approaching and asking the right questions within the different parameters of what a finance function could entail. So I'll get to that. But the second thing it did, it it systemized the whole finance team. It was no longer just, I've got one amazing person that is the financial manager. And once that person leaves, all of a sudden, there's a big problem and a big hole left because nobody understood how that person operated and how he solved the problem or built financial models, etc. So you're systemizing your business, that it's kind of the finance function needs to run well. It's like a well-oiled machine, independent of if somebody leaves or stays on. So that we wanted to solve, because we were in a position where with a lot of our clients, that the trigger point for us coming in is somebody that took up that function and that left, but that did not build systems. The person, everything was done by the person and everything was effectively in his head or in her head. And once that person left, that whole function fell flat. And that's when the client started either with having cash flow problems, not having good cadence, good reports, and not insights. And 3 months, 4 months down the line, they had some sort of a financial crisis, some sort of a financial problem. It could have been commercial, it could have been compliance, it could have been cash flow. There's different ways. Sometimes one falls before the other. But that is something that we wanted to solving it systematically, that we put kind of the IP of this framework. We want to put back into back in front of the founder of the business or back into the business itself, that it's not, you can't be held hostage by an employee. You can't be held hostage by a professional partner or company that tries to play a role, but it actually has to be built internally in the business. Yeah, so maybe I can go into the 5C framework. What is it?
Go for it.
The different elements. The first one, and we've got it on the board as well for the video, but the first one is commercial. And it's 5 C's that all speak to the finance function of a business. Commercially, do you actually have a financial model? Do you know what your pricing looks like? Do you know your unit economics and your resource planning within your business? So do you know when you need to recruit new people, what the timing is? And do you know your margins per product? What are your best products? What part of the business you want to really grow and scale, and which part of the business you would probably want to either just not grow, the marketing shouldn't focus there, or actually you could intentionally just stop that line. The commercial component, there's a few questions that we ask within that, but if you don't have a 3 to 5 year financial model, that is probably a problem, a red flag. If you don't have a budget and your actuals versus your budgets don't get measured on a monthly basis, that is a problem. If you don't have pricing per product and you can't measure and track it, that is a problem. If you don't have a resource plan and you know when you can recruit, that is most probably a problem. And yes, we can solve them in different ways, but we need to ask those questions. Commercially, are you testing your pricing? Do you know what your industry is doing? So that covers commercial in some ways. Then the second one would be cash flow. So cash flow, what we are seeing is you've got amazing businesses, but they don't know the correlation between revenue, net, and then getting net profits, and then cash flow. There's a big disconnect there. And most probably it's because they don't understand their working capital cycle. So one of the things we look at is your working capital cycle. Have you optimized your working capital cycle? And there's been great testimonies of optimizing that for clients where all of a sudden you can put more money back into the founder's pocket. You've not even increased their revenue. You've not increased their net profits. You've just fast-tracked their working capital cycle. How this works practically is if you're in services, it looks different, but I'll take an example of retail. So I need to buy product from China. Now I need to know when I'm paying that supplier. If I can negotiate longer terms, I'm sitting with the cash in my business. Then after I'm paying for the stock, that gets shipped across. It's a delay, most probably depending on when I'm paying, but there's a delay, and the stock sits in my warehouse, and then all of a sudden I still need to sell it, and maybe it's 3 months, a month, 2 months that stock sits on my side, and then when I sell it, am I getting paid immediately, or is there another 30-day terms? Now the working capital cycle, cash cycle, would be that effectively when I'm paying for the stock until when I've sold it and the client pays that money into my account. And I need to understand, the longer that cycle is, the more working capital I would need just to run my business. And if this cycle is not great, your if you are scaling with a negative or a long working capital cycle, it's going to eat up all your cash. And you might have the best profitable business, but you won't be liquid. If you run out of cash, you're out of business. So that's an example on cash flow. There's different elements to it, but we really need to understand, how do you generate cash flow? Do you actually need to get cash flow because of your 30, 60, 90 day maybe cash flow forecast? And then at least then there are certain trigger points to know, do I need to raise capital from investors, maybe from third-party creditors, maybe it's bridge financing. So it's different elements, components of that. Or maybe I need to reduce something. Maybe it's a founder-led business and the person just needs to withdraw a smaller salary or needs to pull a smaller salary. And that might be the best route for that size business. But that's about cash. It's really understanding cash, not income, not an income statement. It has to be pure cash flow, and it has to be a forecast. That's normally not in place, and there isn't a logical understanding necessary by the founder of how does my sale that I did, how does that translate into cash, and when does it translate into cash?
It's that lovely saying of revenue is vanity, profit is sanity, cash flow is reality.
Yes, exactly.
Why do I make a profit but I don't have it in my bank? Common questions.
It's a common question, and for some reason, like traditional accounting firms can't solve that problem or can't give the answer to the founder, and that frustrates them.
Yes.
And that's something that we think we can address and has to be addressed. The third element is just, and you can see it on the board, it's compliance. So the question that we've got with compliance is traditionally seen as a grudge purchase, and
Definitely.
rightly so. But if you think of a company that's growing, compliance can also be seen as this can drive up your valuation, and you need to be investor ready. So we see it as, if you cannot pass a due diligence because of some red flags that will be, if somebody comes in and does a due diligence on your business, you would need, at any given point in time, you need to be able to pass that due diligence. There's a story in the Bible about 5 ladies with their oil lamps, and when the banquet started, they weren't ready. They did not have oil in their lamps, so they had to go back to the store and buy some oil. The other 5 were ready. The 5 that were ready, they went in, and the other 5 that weren't ready, that went to the store to buy more oil, they ended up not getting into the banquet. Now that happens in business when a potential investor comes, or when your bank asks for certain information. If you're not compliant, you're not ready. And as a fractional finance team or solution, we need to make sure that our clients are ready, compliant, and it has to be a proactive function. It cannot be reactive. It cannot just be, I need to get audited. Or, no, you actually need to understand based on your milestones and your growth, what are some compliance elements that would need to be solved in the future. Obviously, a big thing would be tax. And can our team be more proactive when it comes to tax? You can't just get a mail that says this is the amount of tax you need to pay. We actually need to budget, forecast for it, and make sure that we are ready when that gets done, and that we've already done the calculation, and that we've tried to optimize it as much as possible. So compliance, it traditionally a grudge purchase, but we think it can also unlock value if done correctly. And it can also give peace of mind to the business founder and the owner of the business.
I would not have thought you could relate the parable of the virgins with compliance in the 5C framework. But in a way, it does count for that. And it also relates to submitting to our government. I mean, the compliance is laws and regulations we have to abide by to play the game.
Yes.
And as much as it is grudge purchases and something you want to just throw to the side and leave, I'm thinking about businesses where there's a succession planning or estate planning where, let's say, it's a generational company and the dad now wants to retire and hand it over to his children or so on.
Yes.
Unfortunately, there's a lot of compliance involved, and if the ducks aren't in a row, there's a lot of tension it causes relationally. So this really isn't just about ticking boxes. There is a greater effect.
Yes, and something that works practically, it works brilliantly and really well with our clients, and we've got good feedback on, is just having a compliance calendar. A calendar that is built and where it already shows per month what are the elements that need to be submitted by when and by whom. And it just gives peace of mind. It gives oversight, and everyone's got access to that. So our own team, it's driven by the finance team, but that calendar, it helps and it gives the owner peace of mind. He knows that somebody is actually taking charge and in control and responsible for certain functions, and they've already set it out. And the good thing is that is just you can duplicate that for next year. And you can take out, depending on how the business transforms and what changes. But it's a very proactive way of managing your compliance,
Yes.
knowing when to submit what
Very
and what
good.
will happen. The other part that would be great, or that we think adds a lot of value, is having folders with all the information needed to pass a DD, to have that already at hand. So to not have to create a folder for a due diligence. The same information a bank asks would be, so it's not just that you are in a process of selling your business and that's why you need this folder. The same questions get asked by different probably like stakeholders, and you would want some place that this is kind of the true north, and the supporting documents are saved in a way and in a manner that's easy to collect and easy to share with whomever needs it. And it's mostly different stakeholders that need the same information. So those are two things or little hacks that really work well. But somebody needs to manage and drive it, and you need to understand and have gone through it in order to build it in the first place.
Yes.
And that's where it helps to go with a reputable firm.
Very good.
The next one is, so after compliance, we go to capital. So capital, it's a funny thing, but the finance function needs to unlock value for the founders, for the shareholders. And if you don't understand what your company is worth today and where it can be in 3 to 4 years, it's very difficult on a different metric to really unlock value. Like value gets unlocked by increasing the value of the company. So you need a valuation. Every business needs a valuation. It's not about doing the transaction. You need to know what your company is worth and what can it be worth in 3 to 4 years' time. And you need to know what are the key drivers that's going to shift and move it.
Yes.
Then, on top of that, it would be very good to know what you would get out if you do close down the business today, or if you do sell it. And that triggers questions like your own structure. How's the business structured? Do you have a holding company? Do you potentially own it in your personal name? Do you own it in a trust? Is it offshore? Is it in South Africa? And we take you on a journey just to understand, have you asked these questions, and have somebody asked these questions for you? And is your structure in line with where you want to go and where you are currently? Most of the time, structures get implemented too late, and it diminishes the return, the value of the shareholder. And it's a very proactive way just to approach it and to think of it, and to already increase value for the owner by setting up the right structures and understanding what type of mechanisms. If it's a business that's going to generate a lot of cash flow, you'll need to understand what are the impacts of dividends. And based on the existing structure, potentially compare it to another structure. If it is a scale up and they already know that in 3-4 years' time they want to exit, you need to understand what the capital gains tax would be, what that implication would be, potentially in what jurisdiction you want to have it. And is that already in a trust, or will it trigger estate duties or some other taxes down the line? So these type of questions need to be asked, and you need to consider that. Capital also speaks to just your cap table. Do you know who's on your cap table? Is there a way of either buying out, like with share buybacks, buying out some people on your cap table, or do you want to add people to your cap table? So it speaks a lot to the actual capital, the balance sheet of your company, and once again, this is something that gets neglected by traditional CFOs, not coming from that side, not having that founder mindset to really unlock value from the finance function. But it is important, and those questions kind of will fall under that part of the 5C framework. The last one is Cadence. So we've added the fifth one, and the reason for adding the fifth one is systemizing the finance function. If you've got a good cadence, and cadence refers to effectively if you run the amount of steps that you have per minute, what is that cadence? But it's a good rhythm that needs to be built for your finance team. This rhythm could be anything like having some weekly check-ins with certain team members. It could be having a monthly finance meeting. It could be
Project
having
management tools.
it's a project management tool, making sure that there is good reporting and good rhythms built in. If a high value project is identified, maybe building the financial model or doing evaluation, it's having structured CFO sessions where a fractional CFO or your own CFO sits with your team and really strategically also looks at the business and what the finances represents. Have you set out time in your calendar to sit with your finance team and to interpret the data that they are generating? Otherwise, it is a grudge purchase, and it will always be a grudge purchase for your business. But you need that time set aside with the business owner in order to unlock the value. What we've also seen with Cadence is if these rhythms are in place, initially it's almost difficult getting into that habit, especially if you haven't done it in the past. But once the new routine is in place, it becomes a lot easier, and all of a sudden you can be more proactive because you've already set out the time. Your calendar is built around spending some time on the finances, and having focus sessions there. We do look at other components as well. So do you have a strategy session initially? Do you have a execution session for the year? And sometimes it's very difficult. You cannot have a financial model and cannot plan for 3 to 5 years if the business owner did not have a strategy session. Like, where are they going as a business? What is important for them? And you cannot. So sometimes it forces you to have other sessions or before you can even consider doing a financial model. You need to already know what products you want to grow and sell. So it is also a way of collaborating and bringing other components of the business into the finance realm. Overall, something I just want to add is a big thing that we see with a lot of business founders is their understanding of where the finances should be based on working in the business and the operations is normally different to what the financial figures show when they receive their financial statements. And this is something that we have to bridge as overall as finance experts or professionals. We need to make sure that the business owner understands what is reflecting on his income statement and balance sheet is the reality, and it is the same as what he sees in his business on a day-to-day level. If you don't have the meeting with that business, with that founder, and he doesn't get time with a finance professional, that gap will always lead to him being unhappy with whoever the finance or professional service provider is that provides that service, because he just cannot bridge the gap. It's a disconnect from his reality. And as a finance professional, we need to make sure, or as a profession, we need to make sure that we work closely and we can do hand-holding. We can be assisted steward to founders and to CEOs of their businesses. The CEO needs to understand the finance function. Ultimately, he'll be responsible. And for most of our clients, they don't have necessarily a CFO, a full-time CFO in the business. A lot of that rests with the CEO, and they need support. And this is what we can enable and actually give them the right amount of support in the season of their business.
I want to go back to something you said at the very start, which is super key to understanding this offering or this product, and it's we are not trying to be the expert of your business. That is you. You have that magic sauce. You as the founder, you as the CEO or the manager, whatever it is, you understand your business. You understand the operations and the product and the supply chain. I mean, that's your baby. But often, I think it's like in your personal life when you're shocked about the fact that you don't have money by the 20th of the month, it's probably because you haven't budgeted and been honest with where you are.
Yes.
Often it's like a therapy session when we sit with some of our clients asking very difficult, uncomfortable questions that you don't always want to answer.
Yes.
But it is super necessary if you want to know what's going well and what's not going well in your business. And this is what a lot of these elements is trying to achieve and suggest to them and point out to them. And ultimately it's really not personal, it's business. It's trying to elevate them in their business, and I'll point out things where this can go better, this doesn't have to go better. But we're not trying to be the business expert. We're trying to come in as a partner alongside.
And on that, I think with what we've also seen is the offering has to unlock value for the business owner. And unlocking value, like I explained, it would be the valuation of the business has to go up. Normally, it's a little bit more difficult for maybe a business owner to see, especially if he hasn't been used to how valuations work and what drives that value. So the other component is that we want to make sure in our offering within the first 2 months, if a client isn't happy with the retainer, we'll do a money back guarantee. Because we don't want to work with a business owner that does not value the service that we can offer. And on the flip side, if we cannot find a way to add value, and the business owner can see the value, then what are we doing?
Well, that's the point.
What's the point of that? We're not solving his problem. And then it becomes a grudge purchase. And then we've missed the mark. We've not done a great job, and we are not giving the value. And we'd rather stop that engagement. But we need to make sure that we do solve their problem, because they are the expert. And this is where also the relationship component is really, really important. Some clients, their needs are slightly different to others, but really investing and spending time upfront with the client to understand their actual pain points. So what I want to say is this framework, it's not as if we're forcing somebody or on a client like a framework, and you need to do exactly what that framework says. It's asking the right questions so that we can pull out what are the actual pain points, like a good GP, like a good doctor. We need to ask good questions. The framework helps, and it helps every one of our team members to ask the right questions for the right client at the right season of their business. That will unlock and help that business owner to grow the business, to get better profit margins, and to get more cash in the bank. And at the end of the day, he as a family or he as a person needs to be able to pull that out, and that needs to serve his family, and he'll need to be able, and it needs to be a sustainable business. So the framework isn't something that we want to. It will help us to unlock more value for our clients, and we are co-creating with them their specific needs within their business, and over time, I think it will keep on changing with seasons, and it will also be jurisdiction specific. We've seen slight differences from our UK clients to our South African clients to our US clients, but at the core, the framework gives enough space for us to change and maneuver it and to give a systemized approach. And also, it does work very well with scale-up methodologies. So if you are familiar with maybe Scaling Up by Vern Harnish, if you are familiar with Art of Scale by Jason Goldberg, if you are familiar with EOS or any scale-up methodology, this framework fits really well within scale-up methodologies because you will already be accustomed, or you know that certain structures and rhythms is important.
Yes.
And you probably already have a BHAG, big, hairy, audacious goal, but have you modeled it? Do you have somebody that can actually show how do you if you know where true north is and you're going there and there's a big ambitious goal, but how do you break that down into achievable KPIs or achievable goals all the way to where you are today? Like what needs to change in order to get there? So a lot of the times, this is where the system is broken, and it stays a dream, but there's no real route or way of getting there, and they can't see that it's achievable. And so the finance function needs to show you how that is achievable, how it can be done. And yes, the owner of the business has to be there, has to give direction, but somebody needs to assist them.
And those plans are going to change. I mean, those strategies, it will adapt. It's okay, but do you have a plan in place? Is it just something spoken in the air? Is it written down? Do I see it on your calendar, speaking to Cadence? Do I see it on your bank statement that you've now put effort and money behind it? Do
you know how much you need to raise in order to get there? What's the route of getting there? Or you're going to raise it from just reducing your working capital cycle, and your clients are effectively paying for it. I mean, fast tracking it, you could ask for bigger deposits upfront instead of delaying the payments. If you are delaying payments, have you thought about the impact on the cash flow and what bridge financing is put in place in order to serve you actually being like a lender? So I mean, there are real consequences to decisions that are being made, and business owners don't necessarily have the skill set, or they don't have the time, the capacity, and the outside view of making sure that the decision they are made is based on good principles, logic, and good modeling. actual data from their business, not just their perceived kind of understanding.
Yes, and a lot of it comes down to accountability. I mean, it goes both ways, but Finovate is a slogan: business growth, stewardship,
Yes,
and we need to keep ourselves accountable to that for ourselves, but also for our clients. Our clients
yes,
need to be faithful with their business and multiply the resource they've been given. And in many ways, they may have great vision and plans and skills and talents, but someone needs to help to hold up their arms when they're
exactly.
also tired.
And when the business, when a SME thrives, the economy thrives, and
Yes.
people livelihoods thrive. So, as an example, if a business can grow from a 5 million turnover business to a 50 million turnover business, in general, independent of industry, you would probably be able to add another 100 jobs, between 80 to
Massive.
100 jobs, which if we can help 1,000 businesses, once again, the 100,000, if we can help 1,000 businesses to grow from 5 million turnover to 50 million turnover, 5 to 100, that would create another 100,000 jobs in South Africa. So, and it's not just in South Africa, it would be wherever they are based. There's a lot of businesses. There's probably 1 or 2 out of 10 that make it past 10 years. These businesses don't, they just, and the problem is all the IP, the time that they've spent, that gets lost. It's not systemized. It's not necessary that then there's a new business that takes over. They've effectively built something amazing. Mostly it would be in their heads. It's not written down, and the IP is effectively lost. And that's a sad reality. We need to make sure that our businesses, as they are growing, yes, maybe some of them have to close down, or some of them will be acquired, which is a win. But the businesses that are building amazing things and solving some of the biggest problems, we need to give them the opportunity to make it past 10 years.
Yes. Yes, very good. I think we're doing, again, this is the same with like the inward expansion. It's part of a much greater mission.
Yes.
And we're not going to solve everyone's problem, but we have our territory and land that we're trying to help and, subdue.
And maybe to give you an example of like where do we see our sweet spot? So you get your compliance on the one element. We call it essential services. That would be your traditional accounting firms. Maybe it might be your doing payroll, doing IR, like labor support. So it's certain professionals that plays the essential component. It is still essential and it has to be done. So that's one circle that we see that is important, has to be done. That's included in our retainer that we have with our clients. The second one is the in-house team. So that would be a combination of a CFO, FM, bookkeeper, and accountant, for instance. And the third layer would be, we call it high-value projects. So these could be out of the interpretation of the finances, or sitting in a management meeting, or sitting in a finances meeting, CFO meeting, board meeting. Certain high-value projects are identified. It could be a system implementation, it could be evaluation, it could be an expansion into a new jurisdiction, it could be a new financial model. These once-off projects, sometimes they don't get managed. There's no capacity and time within the in-house team to manage that. And it's also the traditional accounting firms or traditional suppliers won't be able to do it, or they just don't know the kind of the nuts and bolts of the business. So how we see it is the fractional finance solution is smack bang in the middle between these three circles. So if you see them overlap, the sweet spot of that, and we've got a kind of a graph that shows that, or a picture that shows that, but we see ourselves operating in the middle between that, understanding that it is the finance, the in-house team, but the unlocking ability sometimes happens with these high-value projects, but it's almost like the essential services are permission to play.
Yes.
If you don't have that in place, you almost don't gain the trust to even play a part in the other components. So it's kind of a combination of this. And once again, within the way that we see things, there is still collaboration. We still work with IP specialists. We still work with tax specialists. We still work with some immigration specialists. It's impossible for one service provider to solve every single problem. But like the GP, we can be the person that can kind of project manage those service providers as well, so that the client doesn't feel that they now have to work and operate with 5, 6, 7 different specialists. And it effectively sucks their time, and they need to keep on explaining to all of them what the actual purpose is. We can keep them close to, but our role would be a very strong relationship, coming in as a partner more than just a service provider next to a founder-led business, or a scale-up, somebody that is not necessary, that's somebody that understands that we can work and we have time to work with the decision makers of that business. It's not just a function of a big corporate.
Yes.
And for us, that I think is our sweet spot, and hopefully we can keep on adding value in that space, not just in South Africa, but also in other jurisdictions like UK that we've done it for the last 4 years, 5 years, and also the US that we see as a great opportunity going forward.
So as we close, I think speak to the small business owner, people we might not ever meet or might never become clients. Obviously, it doesn't matter if you become a client or not. Finance function of your business is still really important, and
Yes.
depending on your season, it differs in what's priority. But speak to these men and women, and after this podcast, after listening to all of this, what do you want to leave them with about what's really important about the finance function of your business that they should know or be aware of or prioritize looking into in future? What should they walk away from with after this?
Yes. So I think if you are a business less than $1 million turnover, or you don't see the need, you're not necessarily growing that fast in you, between 1 and 5 million. 1 million, there is a trigger point in South Africa, and you need to be VAT registered. So if you're below 1 million, you don't have to worry about that. But my advice would be that instead of paying somebody that can come in, that's going to probably take at a minimum 2, 3, 4, 5,000 rand per month out of your bottom line. Everyone, if you are a business owner, you probably know of somebody that is close to you, that has a great finance background. Make sure that you have somebody at hand that can ask the right questions for you as a business owner. It could be a family friend. It could be just somebody that you've got a good relationship with. But make sure that you, even if you are smaller, you get asked the right questions by a finance professional. And based on that, most probably you'll be able to save a lot, and at the same time to avoid certain big holes or big problems going forward. There is also great content online today. It's not that difficult to upskill yourself in finances on the basics. All business owners, independent of the size, you need to know what's in your bank account. You need to know if you can do a budget in your personal capacity, you can also do a budget for your business. So there's always having a budget, understanding what your runway is within the next 90 days, having tracking, especially as a small business, tracking your income, what comes in and what goes out. These are fundamentals. A lot of that would be on the cash side, focusing on cash. And on the compliance side, probably just knowing that you aren't running the risk of being non-compliant, which could lead to certain penalties, etc. And that's probably a friend or somebody that can assist you with that. If you do have a company, you would need some sort of a tax, or you would need somebody that can come in once a year to assist you with your tax, but make use of that person. You don't necessarily then need a full-time finance team. You probably don't need a fractional team either. But do make use of probably already what's been given to you, or your relationship with your accountant, or somebody that at least does your tax filings.
Get someone on your side.
Yes, you'll need somebody on your side.
Awesome. Well, I think that wraps it up. I think we've covered quite a bit, and there's a lot more to dive into, but maybe not now. I think this sets a good foundation. So thanks, Francois. Any last thoughts, comments?
No, thanks for the time. And maybe we'll be able to serve more clients, and it'll be great. Yeah, thanks for the session. I think it's great to know. It's great to know that kind of what our vision is with stewardship, with business, with growth. That over the last couple of years, we are still in the process of refining that, and then making sure that aligns with what our clients' needs are, and seeing the problems that we can solve becoming closer to the actual problems that our clients are experiencing. And we'll keep refining that as time goes on.
For sure. Awesome. Thanks.
Perfect.